Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have David MacMillan, the CEO of Deveron Corp. Deveron Corp recently switched from the Canadian Securities Exchange and now trades on the TSX Venture Exchange under the symbol FARM and on the OTC under the symbol DVRNF. The company is trading at a new 52-week high today of 35 cents with roughly 50 million shares outstanding, or about a $17.5 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks, Trevor. We have David MacMillan with us, as Trevor mentioned, Deveron. This is a company that we've sort of touched base with about a year ago, but really wanted to catch up with David here, really based on some good traction we seem to be seeing on their revenue. So David, welcome. And as we love to have with our CEOs, I understand you've got a presentation for us. I'm going to hand it over to you, and feel free to take it from there.
Great, thanks, Paul. Thanks, Trevor, for having me here, and really excited to meet your network of investors. I'm going to just share my screen here. That should do it. Let's see. So can everyone see my my PowerPoint?
Yep, looks good.
Yep, okay, perfect. So yeah, as Paul and Trevor mentioned, my name is David MacMillan. I'm the president and CEO of Deveron. We are an agriculture technology company that trades on the Toronto Venture Exchange under the ticker symbol FARM. We just completed our sort of uplisting, I suppose, in middle September. So now excited about being on a new trading platform, and that's been great for us. We primarily do two things in agriculture. One, we help farmers manage their farms to increase yields, reduce input costs, and improve farming outcomes, leveraging data. And how we do that is we have a network of soil technicians and data technicians and drone pilots across Canada and in the United States that go to farms and they collect information on behalf of individual farmers and large agribusinesses. We work with everyone from a mom and pop farmer to large multinational chemical and fertilizer companies. The other thing we do is we take all of this information that currently is accelerating in terms of what's produced on farms, and we make sense of it. So we have algorithms that our data scientists have built that look at all types of field data, and we pull all those numbers together and we put them into a nice, easy to understand product for a farmer that helps them understand where to apply fertilizer, how much to apply fertilizer, and when to apply fertilizer. We do the same thing with seed and fungicide and anything else a farmer would use. So there's really this amazing transformation happening in agriculture, which is, I call it the digital revolution, which happened in many other industries 20, 30, 40 years ago even. And there's something about farming that's been very quick to adapt to technology in terms of equipment, but has been a little bit slower on the digital service side. So it's a really exciting, accelerating market that we are so happy to be in, and I'm really excited to walk everybody through our story today. So that's a little bit about us. And it goes back to this mission statement, which is really help farmers make data-enabled decisions. There's this whole idea, I think, in agriculture that it's been driven by very large multinational monopolies that kind of control the way that seed is produced and fertilizer is produced and chemicals are produced. We see as this data that's being generated on farms as an opportunity to democratize farming back to the power of farmers. So imagine being able to tell your chemical supplier that the amount of chemical I need is based on how my fields have performed, not how much you recommend. And imagine telling a seed dealer who is always telling you to buy more seed that perhaps I need a little bit less. These are the powerful decisions that we help farmers do, and we've helped them from our early days 4 years ago, starting the company in Ontario, to now having coverage across Canada, as well as the US Midwest, where we have an office in Kansas City. So the problem really is that farmers and agribusiness cannot get unbiased advice because the rest of the industry is focused on selling them inputs for commission. This is just the reality, and many businesses have these problems. But what digital is doing in every industry is it's giving people concise information so that they can actually see how things are doing, which is moving agriculture from a very subjective science, as simple as it rained yesterday, so I'm going to go apply something, because that's what we do, to this is what the data is telling me. And we're building products and models and services around that solution. 98% of corn in the United States, and this is in Canada and probably in most parts of the world actually, use inputs. So people plant seed and then they put fertilizer in the ground, they put nutrients on their corn, they apply fungicide, they apply chemicals. This is how farming happens. And it's a massive business. In Canada, it's the largest export that we have. Multi-billions of dollars are spent every year across rural lands, and a lot of it is commission driven, which is not a bad thing, but it's just the way the status quo of the industry is developed is to apply more and more and more input. It's not looking at the actual optimum amount of input that's applied on any given farmland. And so this is what we help people do. We provide agribusiness, farmers, anyone else in the industry with an ability to make unbiased decisions by using this high fidelity data. And I'll walk through what that means as we go through. So the opportunity that we kind of look at, and when we think about this opportunity in agriculture, I try to think of it in our customer journey or our story. And usually you meet apprehension. So people in industries that haven't really changed their methods for many years sometimes say, well, it's been working for me, so why should I change? Our idea is always to get on the farm by helping them collect some form of standardized data. So we do that through soil sampling. We do that through flying drones over a farmer's field so that we can give them a visual representation of the opportunity and what lays ahead. Once they start to collect good data, we can start helping them make recommendations around how to apply better. And usually that happens by the second year because they've seen some results because they collected data to start, and maybe they made a decision on their own sense without actually looking at the science of it, which creates this really unique opportunity. You have this interesting flywheel where farmers collect data and then they wonder, what should we do with it? So they come to us, and then they get a return because we've told them where to apply fertilizer or where to apply seed in a better fashion, which leads them to ordering more data and ordering data with also a digital insight. So over a typical kind of 3-year journey of a farmer, we go from a standard, I'm just planting the same amount of seed, I'm using the same amount of fertilizer that I've always used, to collecting data, managing their data, using recommendations and validations that we build, to then doing that again and again and again into some level of perpetuity. Farmers grow different crops every year, they're under rotation, lands are always changing. Once they work with us, it's not dust their hands and say, thanks for the recommendations, we never have to do business again. It builds a very strong recurring relationship where every year they start to come to us to ask and figure out what advice they need. I think people in Canada and even in the US, they forget how large agriculture is. I mentioned at the start that we're one of our largest export is agriculture. There are close to 1 billion acres of farmland in Canada and the United States. If you look at any StatsCan or USDA data, that's massive. I mean, anyone who's been on an airplane from Toronto to Vancouver, most of the time when you look down, you're flying over farmland. It is everywhere. And when I think about the opportunity as a young growing company, we look at this total addressable market. And for us to get to $1 billion in potential net revenue one day, you only have to service 10.5% of farmland in America and Canada. Now, I know some people say, well, that's a very outlandish claim, and when are you going to get there? And we'll walk through how that journey could potentially happen. But I think what I want everyone who isn't looking at agriculture investments, who isn't thinking about farming in the day-to-day, to think about how big of a market this is and how much of an opportunity there is to help people figure out how to grow food better, how to produce food better, and how to influence what is one of the largest industries in North America. So as I mentioned, to go in a little bit more detail of what we do, from a data collection side, we go to the farm gate. We have a network of data technicians across Canada and the United States that help provide soil sampling, tissue sampling, and drone collection. And so with that, it's a really interesting value add of where it starts to look at the science of how crops grow. So if we don't know what's going on in soil, farmers have no idea of knowing what inputs are they lacking. If we don't know what is happening with the plant in the season, we don't know how to manage it. And drone collection is a new piece of technology where we can actually show a farmer how their field is progressing through the season so that they can make in-season management decisions rather than waiting till the end of next year to evaluate how their yield was and hoping that they can do something better in the future. On the insight side, what we do is we then take all this data, which is bits and bytes, and we put it into our system where we have algorithms that analyze specifically what all this information is saying. So we'll take yield data and as applied data of how a farmer produces on a farm, and we look at how to provide better analysis and prescriptions. So as simple as every acre of farmland does not need to have the same amount of fertilizer applied to it. And then once we've made that recommendation based on all our scientific variables, we create a digital script that can be uploaded directly into that farmer's planter or fertilizer spreader. So effectively from southwestern Ontario, we're able to cut a recommendation for a farmer in Saskatchewan to tell them exactly how much fertilizer to use and exactly where without having to visit that farm. It all goes through the internet, creates a file that goes right into their sprayer, and they're off to the races. Another product that we're building out is data management. So there's this huge amount of data that's being developed and created on the farm. One study that we've seen says or suggests that 20 gigabytes of information every day on every farm in North America is starting to be created. You can imagine how difficult that could be for a 65-year-old farmer who has been doing everything by pen and paper and storing it in the shed for the last 15 years, how to make sense of all this information. So we're creating products that actually manage all these levels of information. They make them replicable, they're storable, and they're consistent so that they can share them with any advisors they work with, as well as keep them as records to build value on their farm moving forward. So who have been doing this? We've been really lucky to have an incredible team of people. My background is really in venture capital and public markets. I finished my master's degree in Scotland 10 years ago now and came to Bay Street and started raising money for mining companies and learned all about the venture exchange. So when we were looking for technology company ideas, we thought of Canadian public markets as a natural place to build from. Our president in the US is Scott Jackman. He did 7 tours of Iraq and Afghanistan, military logistics person who's now come back to his roots of family farming and figure out how we scale this massive network of people that we need to move around the country to provide these services to our customers. On our data insight side is Aaron Breimer. Aaron is a top graduate from the University of Guelph, which is one of the best farming programs in Canada. He's sold fertilizer and ag retail for over 20 years until, as we joke, came to the dark side of digital farming. Aaron was someone himself who said, why am I being told to continue to sell more and more fertilizer to my customers who don't always need it? And that's been his journey of building these products and services that actually recommend how much fertilizer to use. Mike Wilson, who runs our data collection team, also from the University of Guelph. He spent 20 years in one of Ontario's largest ag retailers. And together we're sort of building this Canada and US based business that provides these services of top tier agronomic science, top tier data collection on the farm, which is all leading to increasing yields, helping farmers reduce their costs, ultimately impacting their bottom line. Another thing I'll just quickly mention is we're really lucky to have an incredibly strong board. I know for small companies, sometimes it's difficult to find leadership at a board level. Recently in May, Bill Linton joined as chairman of the company. Bill used to be the chief financial officer of Rogers, and prior to that was the CEO of Callnet, which was basically Sprint Canada. After running Rogers for 12 years, he became the chairman of Soft Choice, which was sold to Birch Hill Private Equity for $440 million. He's been a very strong advocate of Canadian technology companies, more so on the private side, but has come on board with us to help us figure out how do we continue to productize our journey and scale our offering across North America. Bill's been an amazing mentor for us, really helping us with strategy, and currently is on the board of the Toronto Stock Exchange as well as Empire, which is owned by Sobeys. So with Bill and then Roger Dent, who many of you may know in small cap technology land. Roger's on our board as well. Has actually wrote one of the first angel checks when we were getting started with the idea. Two of them have just been amazing in trying to figure out how do we go not just from A to B, but what steps do we need to do today to take it to C. And I think over the last 12 months, we're starting to really see the business model execute. Our revenue is growing and our share price is going up finally, and I think that a lot of that can be driven to helpful leadership from everybody. I'll just talk really briefly about growth strategy, and then I'll go into sort of some short-term our previous financial results, just to give everyone a bit of a barometer of where we are. We have three main outlets for growth. The first is mergers and acquisitions, and I say this not because everyone says M&A, that's a small company, because this is how we're going to scale. For us, one of the primary problems we identified very early in building agricultural products and getting distribution is trust. Farmers generally want to work with people that they went to high school with, they go to church with, they've worked with before. Otherwise, it's a very long journey to build that trust and build rapport and to get them to believe that what you have is valuable. So very concisely over the last 2 years, we've acquired 3 companies that have local representation and have a local brand that we've now been able to kind of, I guess, use as a distribution channel for our software, but also as a place that has a local trusted network that now will listen to us when we talk about other products that we're building. So in May, we acquired a company in Texas that added $750,000 in revenue to our bottom line. Great group of agronomists, 110,000 acres of farmland under management. And I think as we move forward, there's a huge opportunity to consolidate some of these independent agronomic service providers. And there's probably 1,200 or 1,500 of them throughout the United States. So we're really excited about that as an opportunity to continue to grow. And I think if you look at the multiples that we announced with our acquisition of Better Harvest, which was about 0.6 times revenue, they're kind of small businesses that will struggle from succession planning in the future, and aggregating together under one roof has provided a lot of, I think, upside value. So we're looking forward to do that, and that will continue to serve as territory expansion and help us with market development as we move forward. The other is, as I've talked about in our customer journey, it's converting our current customers of data collection users into data insights users. So like many companies, when you have one product, you get a customer and you're constantly on the hunt for new customers to grow revenue. For us, once we earn a relationship on a lower margin data collection sale, there's a natural conversion of then helping them manage the data that we've collected for them, which leads to an upsell. And I think companies that can create these scalable value add products become really exciting, because not only is the farmer coming back for us for those basic services, every year they're bundling on a new service. So you can think of, like, even though we may only get 1 acre of a farm, there's potentially a chance to sell 5 acres of services. And that's a way that we think about our growth model really significantly is, when we first started, we had no farms under management. Now we have about 500,000 acres of farmers under management. And you can see how those guys are starting to buy data collection, and now they're starting to buy data insights. And it becomes this sort of self-fulfilling prophecy of growth, because we don't have to go out and acquire customers every time to grow revenue. The third and final pillar of all of this is really our partnership development. So even as a small company, we've managed to get inside the boardroom of a lot of really great leaders, both here in Canada and the United States. We have a digital integration with John Deere that we publicly announced a number of years ago that allows John Deere's data to flow freely and seamlessly into our platform. We have the same agreement with Bayer Crop Science. Actually, when it was pre-Bayer, it was Monsanto, and it was announced on the New York Stock Exchange back in 2016. So we've seen a lot of opportunities through these larger companies to acquire customers just using our digital integration. And so we're a value-add service provider. All of these guys, even some of them that sell chemical, they know that the world's pushing digital. And so they're looking to work with young bootstrap companies that have opportunities on the farm today to provide value and help their growers, build their bottom line. This is something new that we're working on. I only have it in here, and I'll touch on it really briefly for everybody, because I think that carbon sequestration and carbon in general is a huge theme in agriculture that is going to continue to unfold. There's this basic theme that carbon can be sequestered within agricultural soils, and we work with a number of companies in Canada and the United States that are trying to build carbon marketplaces and build validation tools for farmers. The general idea is that companies can monetize carbon for farmers and then resell them to large businesses who are looking for carbon offset credits. One of the things that has to happen for those to be valid is a validation and measurement of soil health. And that's something that our company is very much set up to do. We have networks of people, as I said, all across Canada and the United States that are out soil sampling today. We have a relationship and a deep partnership with one of Canada's largest soil testing labs. So we know more about soil health than a lot of people in the country. And I think that this is going to be an ever evolving place that we're looking at for business strategy. And I'm putting it in here for everybody to digest today. If you want to reach out to me after for some reading material around regenerative agriculture and what opportunities exist in carbon, I think it's an unbelievable place that I think in early 2021 we'll have some more detailed ideas to sort of talk about. So I'm just putting it out there for today. Lastly, we've got our ownership in cap table. So 51 million shares out, as Trevor said. I won't go through this deeply because we've already talked about it. And what's probably most interesting to everyone is, okay, so you just told us a whole bunch of ideas, and are you doing great? Is it happening? And, you know, I said in kind of 2019 to our team, like, I feel like entrepreneurially, we've started to figure it out. Like this flywheel is starting to happen where our collection customers were starting to come forward on insights. And it was starting to kind of happen. Like our salespeople were putting a little bit less effort into like converting guys into new product sales, and we were starting to get a lot more ramp up into customers coming through us. And so this year has sort of been indicative of that. You know, we were 1,200,000 through 2019 half year, through Q3. We were 1.4 million in sales just through half year 2020. Our general, what we're seeing of an average gross margin is about 75%. So we're starting to illustrate this theme that our data collection customers, which is typically lower margin at 60%, are converting into higher product buyers on our digital, where we make 90% gross margins. Like we're running algorithms in the background that have all been built. Our costs are really server. And as I said, we're on sort of 500,000 acres today. We're starting to average, you know, roughly what we're seeing, you know, $5 an acre entry fee. Some farmers are paying us a little bit more as they get into this higher double buy. And I think with our natural expansion into the United States, which we sort of solidified last year with opening of our office in Kansas City, you know, our revenue breakdown is about 60% Canada, 40% United States. That's going to continue to probably accelerate more on the American side as we go forward and invest resources into growing that team. So, you know, I think where we're headed is continued growth. We'll have our Q3 out kind of end of the year, and I think, you know, probably where we've been for a year-over-year revenue growth is like a good barometer of how this year kind of goes. And then for 2021, you know, the world's a bit of our oyster. It's just the conversion cycle is starting to really pick up on how many of our digital users from collection are coming into our product sales. And I think that's where the story is starting to get really exciting. And I think the last financial metric that we can talk about is in Q2, we had our first profitable quarter in the company's history. So nothing monstrous, but $76,000 of black ink, which as a company building technology, we wanted to prove that our economics are real. We didn't want to be telling people for 5 years, don't worry, revenue is going to grow, but so is dilution. Now that we kind of know where we can supercharge and accelerate, we're going to spend money and invest because we want to be in new markets. But it's not an irresponsible management side of just spend until we die and hopefully volume will make it up in the long run. So that gives you like a rough picture, overview of what we're doing, what the opportunity is in agriculture, a bit of our financial metrics to date. Obviously, you can't answer everything in a PowerPoint, and hence the beauty of a presentation style like this is hopefully we get a chance of some good questions, and happy to walk through any and all details with whatever people are interested about. And I'll just leave it with I as a city kid, I truly underestimated how important agriculture is. Like, we all know we need to eat, fine. But now that I've spent the last 4 or 5 years of my life deeply ingrained in farming, I just see how important it is for our future. Data is going to play an unbelievably pivotal role in transforming what is one of the largest industries on the planet. And I think that a bunch of new market participants are going to come in and create new business models that these large standing monopolies are just not going to be able to keep up with, because they're inherently not digitally native. And I think all those things are good tailwinds for us as we continue to grow and sign up more farmers and get more farmland under management. So thanks for listening to our presentation today.
David, awesome. I really appreciate that. I think you covered a lot of ground for sure. I do have a bunch of questions, and I noticed there's a few already in the chat. So hopefully you're ready for a little Q&A session here.
Yeah, do you want me to stop sharing my screen too?
Yeah, it's up to you. We'll leave it up to you. Yeah, if you want to take it off.
I'll leave it up like that. Then people can text me their questions if
there
we
you
don't
go.
get through.
Perfect. Yeah. Okay, so I mean, very nice growth. So I commend you guys on being able to get to growing the business to where you have black ink. That's I think every company strives to get there, but not very many do. But how much? So the growth I saw this year, a quarter, sort of Q2, I think it was over Q2 of last year, you grew by 51%. Can you give us a sense how much of that was because of the acquisition you made, and how much growth is organic?
For Q2, it was sort of, I'm just trying to think what the total number was. About 300,000 of the growth was our acquisition in Texas.
Okay, gotcha.
Yeah.
Good, perfect. Sort of more in general, you guys covered the U.S. and Canada. You're predominantly in Canada right now. Can you give us a more detailed idea of how much, like really, what is the addressable market for what you guys are selling right now?
So for like the things we kind of think about, like on a data collection side, I go back to soil sampling as a basic cornerstone of how digital agriculture is happening. And if you think of every farm in North America, and let's take out 25% of them because they're smaller farms and they're just never going to invest in anything and they're just happy kind of, subsistence. You're still looking at, like, we always think of it around, there's 86,000 farmers that farm at least 2,500 acres across Canada and the United States. And many of those farmers grow 20,000 or 50,000 acres, like they're mega farms. So I was just trying to think of it as like maybe a good metric is call it 400 million acres of like prime digital customers. That would be soil sampling, not annually, but they would be needing to soil sample every kind of 3 years. And then all of the digital insights that we would sell them are every year. So I always say, like, there's probably $5 an acre in data collection, and there's probably today $10 an acre in digital insight possibilities. So call it $15 an acre if you were able to kind of get everything and everything's mature across 400 million acres of farmland.
Gotcha. Okay, perfect. It's a great way to break it down there. Can you give us a sense? So, okay, so if somebody's paying as much as $15 an acre for all these services, what's the cost benefit to them? What are they getting out of it as far as dollars saved or extra dollars earned?
Yeah, so typically, especially when you start getting into, it's like data collection can be an investment up front, right? Once the farmer knows that he has field variability and like maybe his limiting factor of growth is phosphorus, He might have to wait till next year to make a management decision where it's going to pay. But generally what we see through customers that we work with is the yield increase is anywhere from 10 to 30%. And you'll see a cost decrease of anywhere from 10 to 50%, depending on how much precision a farmer uses. So if you can think of like, even after service fees, like we try to always think in agriculture as like a 3-to-1 payback. So 2-to-1 still tough to kind of get someone motivated. But if we can nail that 3-to-1 payback, which is, if we can give a farmer $45 or $40 an acre back in cost savings or yield increase, it's a good deal. And that's part of the thing that we've started to build is a diagnostic and reporting tool that unbiasedly shows people like, here's what your management decisions were previously. Here's a line in the sand of using our digital tools. And then here's a profit report that looks at every acre on where the decision was made and then aggregates it up. And I've got a number of case studies actually I'd be happy to share with you after, Paul, that can kind of like detail how like somebody sees that return on fungicide, how they see that return on a fertilizer, how they might see that return on a seed cost.
Yeah, no, I'd love that for sure. The more I know, the better here. So you did mention your blended margins, I think you said were around 70 or 75%. Obviously, the more, I think it's the digital product, high margin. Maybe walk us through a little bit more. How do you walk a customer from the lower end stuff up to the higher end stuff?
It's funny, like the world says you need to soil test now. Like governments are saying, farmers have to have soil maps so that they can show 4Rs, which is using fertilizer the right place, the right time, and the right amount. So it's like getting good data as a benchmark, even just for audit purposes, is something like almost becoming a cost of doing business. But there's no value add. It's like many farmers will they get that, and then maybe their fertilizer rep has said you should soil sample, and they never get around to analyzing it, and they buy the same amount of fertilizer. So what we're starting to do is, as we create our products and we've created our like digital marketing channel, it's starting to show these people the potential of what could be. And it's really simple. Like if you've applied the same amount of MAP across your field and all of your field for your lifetime, and we say, we know you have high yielding zones, we know you have low yielding zones. Imagine if we applied more fertilizer in the high yielding zones because they're good zones and you're going to get payback, and we cut back where it's low because it's just never going to give you any payback. And those are really simple things to do to start. And the farmer doesn't even have to change the amount of fertilizer they buy. They're just redistributing the rate. And those are these easy like journey wins where then they can start playing with other things around how many seeds per acre should I be planting on my land, given that I have, too much phosphorus in certain areas. So we can do all sorts of advanced analytics with agronomic data on a field by field basis, but it's really starting with that collect data first and then show them the small win, or show them where they can turn fungicide on and off, not even a variable rate, but spray this corner of soybeans and not this corner, which is instantly a $35 an acre saving just by not applying fungicide. And the reason why you're not applying it is because the data shows that the probability of disease is quite low. So why would you apply it? It's really been that journey. And then honestly, part of it is we have such amazing partners that we work with. So like, not only do we have agronomists on our staff that are out working with our customers and talking through some of these ideas, we have independent consultants all across Canada and the United States that like use our tools to just help manage their businesses better. And everyone kind of knows how to help farmers make it all work. It's just there isn't a software portal that can easily apply all of these things for them. And we're seeing a lot of growth of that opportunity as well. It's almost create like white labeled reports so that independent consultants can go out and show people, hey, these are the decision makings that I've been making for you. And we just take care of managing all their data for them, which is a great value add.
How do you guys physically collect all this data?
Physically collection, you can think of it as like literally we go out to farm fields and we dig holes. We go out to farm fields and we fly drones. We've started building products that leverage satellite imagery, which is obviously like exceptionally more scalable. But it's funny, like when we first started the company, people said to me, there's no way you can scale. What are you going to hire like thousands of drone pilots? Like when we were really focused on droning. And we just thought like, yeah, but like networks figure out ways of like what a baseline capacity is. And like, there's a lot of opportunity in rural labor for on-demand work. Like a lot of our supporters now they don't even have to be employees. They're contractors that they have their own soil sampling equipment, and we're almost acting as a marketplace. So we aggregate 50,000 acres of orders for soil sampling in a certain area, and we have 2 approved contractors that will take that work on and get it done within our protocol. So it's been really interesting to like almost be the marketplace in a way of where people come to say, I need all of this done. And then you guys use your technology to bid it out and make sure that all the data can come back to us in a standardized format. But we don't have to own every truck. We don't have to buy every drone. That's been a really interesting transformation over the last 18 months. That's helped us go from like, we can provide coverage from someone to a farmer in Texas up to North Dakota. And this year we serviced PEI west to Colorado.
Wow.
And we never turn down work. Like there's always some way to kind of get this data collected. And it used to be like, well, we could be like the Uber of, farm data collection, but it's really just, there's a baseline capacity where if we have 20,000 acres of orders, we'll put a full-time employee in there and like the economics work. But while it's at the fringes being built out, we work with third-party providers as well that, all believe in this idea of independence in agriculture, and it's been working really well.
And give me a sense, obviously a very rapidly growing business, but give me a sense of what the competitive landscape looks like. Who do you compete against for these services?
So there's the big platform companies out of Silicon Valley that raised hundreds of millions of dollars in the ag tech gold rush of like 2014, 2015. And the problem with them is they thought about scale first before customer satisfaction and like good data. So everything was built on satellite technology, which just does not give you all of this field health and soil health and field level information that we just believe is what the baseline of real agronomic data science is. So we've seen those guys, rather than just focusing on winning in Canada or winning in America, they're trying to win globally, which means it's like, hey, we signed up 2 million acres in Russia, but we've forgotten about our core user base in markets where we first started. So I think our more custom touch and ability to provide a service for data collection that ultimately costs more money, but it's of higher value, so farmers are paying for it. I think that separates us on that side. On the other side, it's to some extent, like traditionally you would say agriculture retailers or cooperatives, like the people that sell fertilizer and chemical in general, you'd think, well, they would be competing against digital companies that are trying to recommend using less inputs. But we've actually found that we partner with lots of them because their customers are asking them to go digital. And I just say to them, guys, like, why don't we can white label our services. And if you buy them, you're going to get the margin bump. Even if you lose low volume on your low margin product, you're going to get the digital sale, which you don't have to invest any capital in building out the architecture. We've already built it. And there's a really great, again, idea of like sharing resources. Because we've been building these network of people, it helps relieve a lot of labor strain for them. Like you can imagine you have someone with a master's degree in agronomic science that's selling fertilizer who makes a 6-figure income perhaps. Having them going out into a field to collect dirt all through the fall is not what you want them doing. So they can leverage our network to increase turnaround time, which lets them sell more of whatever they're selling. So we found that although traditionally you think of them as competitors, they've actually been more partners. And then there's hundreds, as I said, thousands of these independent agronomy consultant businesses that, some people in new neighborhoods that we go into say, you are basically doing what I'm doing and you're just here to take our customers. So we don't want to work with you. And that's fine, but we're really not. We're building tools. Like we want to invest in building the network to allow data turnaround to happen very quickly. and we want to manage data and provide benchmarking tools and algorithms that everybody out there that touches farmers can work with. So that's kind of how I see it. And then last and not least, the competitive landscape is all the big chemical and seed companies who have built their own platforms, and they've built all of their own data management tools, and they're all very great. The problem is that they're biased. So if you ask a large seed company to recommend another seed company's seed because it would be best for that farmer, I don't think you're going to find many that are going to do it. Mm-hmm. So our whole idea is that, again, with the changing landscape of digital bringing power back to the grower should use data to decide which seed works best on their farm, not which rep is the best rep. And it's the same for chemical and fertilizer. It's tough to provide unbiased recommendations on what product to use when you're in the business of selling more product. But ultimately, we also provide network services for those guys too on research trials where it doesn't make sense for them to buy, drones, and it doesn't make sense for them to get people into areas that they don't have coverage. So I want to believe that there's a very deep collaborative opportunity here for small and big companies to work together. And we've managed to build lots of great relationships, sharing data with everyone as large as Bayer, down to local ag retailers here in Ontario and in Kansas and Missouri and Minnesota.
Awesome. So when you're dealing with a farmer, how and sort of when do they pay you? Like, is it you provide a service once a year? You provide services 3-4 times a year? I want to get a sense of the recurring nature of your relationship with the customer.
Yeah, it's a bit of a evolving landscape, and it's cyclical for certain things. So the most perfect customer we kind of categorize as full farm advisory. So they're relying on us for all digital recommendations, all their data collection. And, we maybe bill them just on a quarterly basis, because generally, we soil sample for them in the spring. They get all their planting and seed reps in the spring. In the summer, they might get some in-season management representation, and then we do soil sampling in the fall. And as you can imagine, like if we sign up a customer that has 20,000 acres, we don't soil sample all of those acres in the spring, and then 4 years later we say hello. They typically will give you a third or a quarter of their land, depending on how actively they're sampling, so that you kind of get a consistent revenue stream even on data collection from that customer. And then on the analytics side, again, we're working on more productized bundles where someone might be able to basically subscribe to a subscription basically of all of our services within the year, and then maybe they pay us monthly. But for now, it is on a bit of okay, I need a seed script, and so I'll buy that seed script, and we get paid when we deliver, and we recognize the revenue once it's been invoiced and the digital files in their tractor.
Okay, gotcha. Okay, now you mentioned seasonality. Obviously, farming is a seasonal business. How does that affect your revenues on a seasonal basis? I mean, does everything shut down in the winter, or describe what you can for me?
Yeah, so I think if you look back through everything that we have to, like Q2 and Q4 are generally like our busiest times. I think as we again start to productize a little bit more and create these algorithms that are we're able to distribute across the internet, like we built our most recent variability tool, that's going to add a little bit more streamlined nature to things. But farmers are getting to work heavy in the spring, and they're doing a lot of work in the fall. Like it's just kind of the nature of the beast right now. And most agriculture companies, for the most part, you'll see that cyclical nature of their revenue. If you looked at a Service or an Ag Growth International, they kind of follow these cycles of when farmers are buying things or services for their farms.
Gotcha. Okay, so obviously the world changed over the last 9 months or so with COVID. Sort of two questions. One is how did your business change, or how do you function differently under the COVID circumstances? And has COVID improved or damage the outlook for the business? What any opportunities have sort of jumped out because of COVID?
So agriculture from the first day is obviously essential service. So, I mean, if you can imagine decently young, I can use the word young still, CEO in March wondering, am I going to have to shut down my whole company and put out a press release saying the government will not allow us to work? And I remember calling a couple of mentors in the space, and they said, Dave, like, the world needs food, man. Like, they're always going to shut us down. So, like that's been a reality. I think you've seen, grocery chains have done all right. And actually the farmers are this is one of the best years we're seeing for yields across the last 4. Like, weather actually kind of worked for most people, except for a subset of Iowa that had a really bad storm. So generally it's been really good. You have record low interest rates, which means farmers can finance things, and fuel's at the lowest it's ever been, which is a large cost of doing business for them. So macro picture is actually pretty good. Even for us on a COVID basis, I think because part of our business provides this network of like on-demand labor, we just noticed a lot of our partners kind of calling us and saying, hey, we need your help to do ABC. When typically we used to think, oh, well, you have people, and well, we're on like a 50% workforce, so there's not as many people coming into the elevators this month. So, can you help us out? And that's been something that's been really good for us. I think also the frustrating thing personally is we bought a company in the middle of COVID with the border closed. So it was interesting. Like, luckily I had our US team like go and meet Better Harvest personally, but I did everything over Zoom and got to know them. And, we still joke about having our big, Texas steak to celebrate whenever the border opens, but we just adjusted. And to be honest, our company has always been largely geographically distributed. Like, I'm in Toronto. We have an office in Chatham, which is Southwestern Ontario. We have an office in Kansas City. We have field staff like all over the place. We have people in middle of nowhere, Saskatchewan. So we've always just been kind of video call before video call was big, and I didn't mind traveling, but I didn't want to go to San Francisco every week. So I was doing Google calls with partners in Silicon Valley, and it's kind of been normal for us. Aside from you can't jump on the highway and go have dinner with your team, which has sucked. Mm-hmm. But other than that, farmers are kind of happy if we're not at their field every day bothering them. It's just like, hey, I need this done, get it done, let me know when it's done. And all our people, they're kind of in the car by themselves all day doing what they do. And our people that write code and do data science can really work anywhere in the world because it's all on the cloud. So for us, it's been, we're lucky. It's been okay. Unlike, I think, a lot of people, obviously, in the United States and Canada are having a really tough go in it.
Mm-hmm. For sure. You touched on a bit of sort of the sales process and why this acquisition makes so much sense. Maybe explain that a little bit more. This acquisition comes with a lot of relationships with farmers. Is that really, are you going to have to acquire a lot more companies like this to really be able to scale your sales? Or what sort of organic sales can we see?
I think now, like, it's funny. Every year that we've been in business, our organic sales start ramping up. And like, we're investing in our sales team. We have 6 full-time account executives that are out prospecting different channels that we can sell our services and our digital tools into. But it still goes back to local folks who have been in these markets for a long time, like, know where the people are. And philosophically, we all believe in the same thing. And what I say to them is, it'd be really nice for me to have a toehold in every state with someone who grew up there and knows the local agronomy and knows how those farmers think. And they're generally profitable businesses that I think they've left the big ag world to do something independent. And so our pitch to them of philosophically saying, what would the value of a company be that had 100 of us all working together, or 500 of us all working together? So as a public company, aggregating all that revenue would be incredible. But for an independent agronomist who's looking at a $500,000 a year business that's maybe netting, $50,000 or $100,000, like, it's an isolating gig. but to be now part of something bigger and saying, hey, this worked for 100 of my customers. Will you build a digital tool that people in Oklahoma could leverage the same thing for? That's a little bit of what we're buying too. We're trying to buy local market intel to drive the next generation of our products, which we'll make available. And I think there'll be some level of scale that we'll get to in certain places where we won't need to buy anything more. But I can't get on a plane to go to Minnesota anytime soon. So who's the next best person to do it as someone who lives in Minnesota that has a profitable business to start with? I really think it's a complementary place on top of not taking the pedal off the gas for our sales team. And you know, if I break down my 100% of my time, I probably spend 60% of my time talking to my sales team and talking with our sales leaders to figure out, okay, guys, we've done this. How do we 10x it? Like, what's the strategy look like to get there? And that's what we want to be thinking about, because ultimately that's where the real value of the business will be, is when we figure out organically how to keep accelerating things.
Mm-hmm. And then speaking of the M&A sort of side of it, what does that look like? How do you have deals that you're looking at right now? Is is there a lot of these type of deals? I imagine sort of the whole succession issue is probably pretty prevalent with these type of businesses.
Yep.
Tell me what that pipeline looks like.
So prior to Better Harvest was the first one we saw that we really liked, and we liked the guys. Like, I think one of my things was, for the first 5 that we do, I really got to see eye to eye with the owner, founder, whatever, to make sure that philosophically, one, that's not an exit. Like, they're going to be part of this while we figure out how to do it, and that they want to take some of our software and actually put it into their network, not have nothing to do with us. And so once we found that, I thought, okay, and their expectations are not tech level multiples. So it was like, okay, we can do this. We started building a database. And so now I'm like actively talking to 50 kind of companies across the US and Canada that do ag services or some sort of customized consulting. How far along are some of them? Like 10 are probably further along than most, because you're trying to get to know entrepreneurs, and now we've hit harvest, so everyone's busy because they're in the field helping their customers. And our goal was to get one done this year and figure out the integration to make sure that moving forward, if we do more, we know how to do it and make sure that those can be successful. And the other thing being, like, we want to make sure that it's not just buying revenue for the sake of buying revenue. We really have to believe that we can add 3 to 5 times value in these companies moving forward. And I think, we're really starting to figure that out with our group out of Texas. So, I'm really hopeful that we can get a few more, done between now and over the next 6 months. Like, we will do them. I don't think it's a forward-looking statement to say we will do them. It's just making sure we find the right one. And I think I'm a man of math, and if we have lots of balls in the air, we're going to be able to get that entrepreneur to see eye to eye on all these kind of metrics that have to align, if that makes sense.
Absolutely. And then I do recognize you guys did a relatively small financing, I think, early in the year. And if I'm not mistaken, that was with Bill Linton, the ex-CFO, was the majority of that. Do you guys have the financial resources to do sort of the acquisitions you want, or is this something that's going to rely on another equity raise or some other form of financing?
No, like right now we're probably sitting with $1.5 million in the bank, and we're not burning a ton of money. Any burn that we would have is going into engineering resources, because we see opportunity in again, further productization. That being said, now that I feel like we're starting to ramp, we will want to accelerate our growth, because we're public and nobody wants a little $4 million a year or $8 million a year company and then it's capped. And I think with Bill getting involved, there was always this idea of okay, if this market is $500 million a year or $4 billion a year, depending on how you slice it, how do we get a lion's share of that? So let's build the strategy and be responsible about how we get there. but not be afraid to raise capital if the right thing's there. And so right now we're at a great steady state where we got Bill to join the board. I'm working through this new strategy to accelerate kind of growth and what that's going to look like. And but for the time being, we're really good. Like if you look at the metrics that we use for Better Harvest, I mean it was $125,000 of cash. So we've got I was a relative war chest to do a few more without having to worry about anything, because the size of these transactions at our level, they're not $10 million companies.
Mm-hmm. Understood. Perfect. A reminder, everybody that's listening, we do open it up for questions. If you've got a question that you haven't heard me ask, please, put it in the chat function there. A couple more questions, David, and then we will open up because we do have some questions. Insiders, give me a sense of insider ownership. I noticed a name Greencastle owns about 20% of the company. Who's Greencastle, and what can you tell me about the rest of the insiders?
Greencastle is a TSX.V listed kind of merchant bank. I worked with the firm early on in my days, and we kind of construed what Deveron is as a vehicle way back when, and they've been a strong supporting shareholder since day one, like hoping that we build something transformational in Canada. It's on the venture exchange. VGN's a symbol, so you can find all the public information you would want about them. They invest in oil and gas, mining, technology, yada yada yada. And then ownership from insiders is sort of the board between Bill, Roger, Jim, and Chris, and then myself. The way the company was originally set up, we repurposed like a vehicle, and so when we took the vehicle public, it was a mining thing that I was a director of, but in early days of graduating from student debt life. So my position is majority in options, but all of those are at 30 and 37.5 cents, which I've always said, I think the next best thing to align me with everybody else is to have a strike price that, has to be, we've got to build the company into something that's meaningful, and a transaction has to happen for me to have any, monetary upside. So that's kind of where we're at on that side. The rest of it, like since about 2017 or 16, I've financed it with my network of people in Canada and Vancouver. There's probably 7 or 8, very large shareholders or like brokers that have a number of their clients in the company for the long haul. So, I mean, the last couple of days is, we always said like, with 51 million shares out and like a large control amount of that within people that we know and people that believe in this opportunity around ag tech, one day eventually it will start to move as we start to deliver results. So go and grow the P&L, like that's your job. So that's what I've done, and you kind of never know when you're going to get a little bit of response, but it feels like since we've been listed on the venture, maybe more people have started to discover the company and what we've been doing, and the price appreciation has been good, but it's come down. It got hit from a COVID low, as all illiquid companies did, and I think we're obviously trading at a high, but we've kind of fluctuated always around 25 cents for the last little bit. So I think that's a little bit of a breakdown of our investor base.
Gotcha. Why don't we open it up to some questions here? I'll go through some of the stuff. Okay, this is a general question, and I imagine this is a very hard one to answer, but how big is the farming industry in terms of just sheer revenue? I mean, you mentioned like 1 billion acres, I think, at one point.
Yeah, I should actually I'll follow up on the number. I can tell you that alone in Canada, we export, I think it's $58 billion worth of end product. It's in the, I think I saw it's like $4 trillion a year. It's insane. And I should have that number. I should know that number.
It's a big number. I think everybody can appreciate
it's
that.
So big that you're like, it's so big. It's $1 trillion.
Yeah. So this one back, and just refresh my memory, you'd mentioned sort of the strong quarters and the weak quarters. I think you said Q2 and Q4 are your strong quarters. Is that correct?
Yeah.
Okay, good. That covers that.
And Q3 is not abysmal, but Q1 is like we're doing a lot of planning and selling, but there's just not much recognizable revenue that's kind of high. But we still, like, even year over year, we kind of tripled that last year. So we're still growing.
Okay, yeah, and I think that's the thing to watch more than anything else is just the year-over-year growth, and even though there's some seasonality.
Yeah.
How many acres are you covering currently? I remember you mentioning 500,000 acres. Is that correct?
Yep. Yeah, about 500,000 unique acres.
Yeah, and I guess the question is, are all acres the same? Obviously, each acre, each farmer is going to add different services to it. So, from a revenue standpoint, you mentioned all the acres are slightly different.
Yeah.
But you'd mentioned some numbers as well. I think on average right now you're seeing about $5 an acre.
Yeah, and the reason why we could get into the specifics of sometimes when we do data collection, it might, if it's not high resolution, like it's bulk sampling, it may be, you know, $1.25 an acre, but then we also we can make $12 an acre if we do really heavy site specific sampling, which is what we're really aggressively pushing into. So again, it's not perfect. I'm trying to give people a rough back of the envelope metric, and it's one of the things, like, I think as we move forward, and especially as I keep talking with Bill about how we position the company, putting out some of these baseline metrics for folks, like, so number of acres under management, number of customers, number of enterprise partnerships, and then maybe, you know, this kind of like revenue per acre from each product line. I think that will help people with, you know, their own theorizing about how things are going to grow.
Okay, gotcha. Here's a question around the competitive landscape, like large farmers with these, you know, tens of thousands of acres. Do they have the scale to actually provide sort of their own services themselves, or are they still contracting out to groups like yourselves?
Yeah, but we probably have 5 farmers that touch 20,000 acres each. Like, so even within those customer groups, so there's an agronomist on staff, but, you know, sometimes those agronomists went to school 30 years ago and they don't have a data science background. So, like, again, we're not trying to replace agronomists. We're trying to build products and services that make their life easier and focus around building networks so that they don't have to collect data. But predominantly, yes, like the large guys would probably rely on us more for data collection. Some of the custom scripting, I think when their kids take over, they maybe will rely less on someone in-house and they'll outsource more. But it's tough to break up relationships with guys that have worked together for 30 years.
No doubt, no doubt. Give us a sense of sort of where your R&D or your product development is going. Sort of what direction, what kind of, you know, other problems you're looking to solve.
So there's a lot of, like, there's this basic analysis of, like, telling someone based on their information in a single variable idea, like, hey, you have high yield here, so apply more fertilizer there. We're trying to now look at more multivariable systems where you have all these different layers of information, and using data science and then potentially machine learning to actually learn from all our aggregate information. So one of the stories we talk about is, like, what's the blue sky value of data? The more farms that we start to aggregate under our user base, we start to be able to test how well certain recommendations we make, not just for an individual farmer, but like given weather type or given soil type or given whatever. So I think there's a huge opportunity there where we're going to be doing R&D. And I think today, you know, we probably have one of the largest drone imagery data sets in maybe even in the world. Like, we're the only full focused agriculture based drone remote sensing company. Like, everybody has satellite data, but we have drone data sometimes on farms for over the last 5 years. And then we have their as applied data, we have their yield data. There's all this, like, interesting kind of correlation that you can start to do. So we're doing that, and then a lot of our spend is going to be in, and again, I talked about this productization. So digitizing the user experience, so empowering our customers to be able to do more through web-based applications that we build. We have actually our first one available. I send it to you guys all after, but it's It's what we call the variability tool. So basically any farmer, anyone in the world can log onto this system, and it's just a web domain. They can look at their farm and they can run a quick analysis that patches in satellite data just to sort of see how much variability they have in their land, which is then where we make a sale because we help them manage it better. And these tools are the things that we're starting. We launched this as an idea to support our internal sales team. And now we have people from South Africa, from Turkey, from Pakistan interacting with it. So we're kind of really getting excited about building this, I guess, more of this like digital customer facing product, which will then lead to, more to the subscription idea of, okay, for $100 a month, you can get unlimited scripting and a discount maybe on data collection, which I think, again, will help us scale our revenue model.
And so I've seen a little bit more stuff on sort of fixed data collection in the agricultural industry. So, collecting data. Are you guys were involved in that, or is that something you're looking at down the road?
We do. So by fixed data collection, do you mean from a standpoint of like a weather station?
Well, yeah, sort of like that. You get some monitoring equipment that sits on a farm. It's collecting, the changing data. It's not like you're coming there to service the farm every now and then. It's the data.
Yeah. So I mean, we're a provider to one of the largest weather station companies in North America. So we install weather stations for them, which is nice because our people are out there, and it's just another way to improve our unit economics. I'm skeptical still of the cost of on-farm sensors. Like we've talked about soil sensors being put in seed and then planted, every 10 acres, and IoT is going to beam that information to the cloud. And it's cost prohibitive. Like it's really expensive still to buy these things. So you can't really get the fidelity that you would get from doing 1.5 acre or 2.5 acre grid. That being said, to me, farming is still all about distribution and trust and relationships. So by us going out there and building our credibility, being a forward-thinking group that farmers are coming to say, hey, what's coming down the pipeline next, it allows us to talk with these companies in Silicon Valley or wherever about their technology and potentially what we'll be able to do, like to introduce their products to our market, which I think is probably the way that we'll play it. Like we believe that every layer of information will be valuable for farmers. It's just a matter of what is the cost of that data, what is the value it's going to provide him or her, and then how can we make that available for them.
Perfect. Listen, we've run out of time here. What we always like to do is leave you a couple minutes to sort of give a parting summary or anything you think investors should really watch out for in the next sort of 3 to 6 months or longer.
Yeah, so it starts with agriculture technology is going to be one of the most incredible, revolutionary things to be part of, I think, over the next 15 years. We are just starting to see farmers outside of upgrading equipment really use technology and leverage it. I think the number is 30% of farmers today use digital, but that also includes auto steer on their tractor. But the younger generation is starting to take over the farm. Everybody wants to leverage data and connectivity. Rural internet and broadband is improving. The ability to get information into the cloud is accelerating. This is all a positive thing for agriculture. And at the end of the day, for small companies, being in very large markets is exciting. When you're also in a large market where like traditional monopolies have dominated a business model for upteen generation of time, it's when I've really gotten excited about the possibility that data will democratize power back to the farmer like digital has done for umpteen other industries. And I think farming is slow because it moves on an annual basis. Like when we help a farmer in February, we don't talk to them until next February about how it went. So it's not this like super cycle exponential growth that you get with consumer technology where immediately I have some like positive reaction and I forward it to 200 of my friends and then they're all using it. But like the lifetime value of an acre in agriculture is unbelievable. If you think of an average customer we have that's maybe 2,500 acres and does $15,000 of business with us, you have to screw up to lose that customer. He has done so much due diligence to decide to be your customer that he will actually be in an LTV equation like a perpetuity. And the customer acquisition cost of that grower sometimes is a cup of coffee from his buddy at the local coffee house. So the economics of agriculture, although when you think of it being this huge iron $1 million combine, like across the country geographic distribution, are actually incredibly supportive for new companies that are digitally native and are being built on the internet. And I think, you know, we've started to show that. I mean, I don't want to say I had that thought process originally when we first founded. We thought data was going to be big in ag. That was our thesis. Now that we have a business model that's supporting that, we're going to continue to accelerate. I think as a young company, getting credibility is all that you can do. And we thought, you know, we did that systematically with our early investors. We did it with our partners. And I think now, you know, Bill will hate me tooting his horn, but with him coming on the board and investing himself and spending a lot of time and thinking about how we productize the company, you know, here's someone who's spent 20 years changing technology in Canada and been really successful at it. I think there's not many little companies on the venture exchange that have these things going for them in a market that is so ripe for change. And no one knows about us. Like, I've done no investor relations for 3 years. We've just been trying to build. We're now on the venture. We're going to start being a little bit more active, and hopefully more and more people are going to discover us. And I've got the next 20 years of my life to make this an unbelievable success. And I hope people will join us for the ride and learn that agriculture isn't just hay in the hair. It's going to be one of the most exciting industries on the planet over the next 20 years.
David, fantastic. Thank you so much for telling us and updating us on Deveron. Folks, it's Deveron UAS. New symbol is FARM, FARM on the Venture Exchange. DVR and F on the pink sheets, I guess, in the US. Again, David, I want to thank you for your time and appreciate it. Hopefully we can catch up with you when there's a material update. But yeah, at this point, you know, I appreciate it. And at this point, Trevor, I'm going to hand it over to you.
Thanks, Paul. And again, David, thanks for joining us on Small Cap Discoveries conference call today. Before we sign off, if investors are looking for more information on the company, where can they find it?
You can go to our website. You can email Phil Linton directly. You can email me too. My email's right there. We're pretty accessible people. We believe that, you know, communication with folks that want to know about our company is one of the most important things we can be doing. But there's a lot of information on our website at deveronuas.com. And we've got tons of videos on YouTube about what we do to spell a lot of these details of agriculture. And we have a Twitter feed that's much more grained to agriculture than kind of the business model of investing. But I think, again, we're trying to build this or lay the bricks and foundation of being a leader in agriculture technology. So you've got to understand that first before you can really get on board with us, I think.
Great. Awesome. Thanks for joining us today, David.
Thanks so much for having me. I really appreciate the opportunity.
Okay. Bye-bye now.
Bye, guys.